All right, so we're gonna spend as long as we need to go through this, but I'm gonna cover mortgage protection from top to bottom. Okay, and I think a lot of times when people struggle closing mortgage protection deals, it's because they're not showing the value and they're not identifying the problem. Why does it seem like my screen is so close? Like these new cameras are weird. It like adjusts itself. I feel like I need to be back here. Um, there we go. I feel a little bit better. Why you keep scooting in? Like it's follow me. That's freaking me out. I don't feel like people build the value enough to really have the client want to move right then and there. And when you do, most of the time when I was finished with an appointment, the client would ask me how do I get started? That's the question that you want at the end of an appointment. How do I get started? So how do we do that? Well, it really does start, and I'm not going to go. Actually, I could go through a whole appointment, but I'm going to go through concepts of what mortgage protection is. And y'all got to understand, your job is to ask as many questions as humanly possible while you're on the phone with that client. And some of you go like, "What questions?" Well, I mean, if you actually have a conversation with somebody you've never met and you pay attention to what they're saying, hold on, somebody just sent me a text. Turn off auto framing in Zoom settings. That will stop them. Okay, let me see if I can find that. Settings. Bear with me, y'all, because this is kind of freaking me out. Uh, did that just stop? That would be dope. All right, cool. Maybe it did, maybe it didn't. I'm not going to spend too much time about that. Um, so if you actually are interested in having a conversation with somebody you've never met, there's a million things you can ask them. I mean, what do y'all do for work? How long have you been there? Do you like your job? Do you like your boss on a daily basis? What do you have to deal with? Like, there's just thousands and thousands of things. If I look through this list, I'm looking for somebody I've never spoken to. Um, let's say Josh Stewart. And I started to have a conversation with him. I would know more about him in 10 minutes than most people that actually know him, because I'm curious, and I'm curious for a multitude of different reasons. One, I'm genuinely concerned about him and his family. If they filled out a form, replied online, called in about potentially protecting their mortgage, that means they need my help. Um, so I'm genuinely concerned about helping them, and I do know that the more I know about Josh, the easier it's going to be for me to get him to move when it's time to move. Because people will give you all the ammunition you need if you just take the time to ask. So, that being said, I'll start out just, a little bit of small talk. What do you do for work? Do you like what you do for work? Um, do you like, I found it. Thank you so much. That was really getting on my nerves. Are you married? How long you been married? Where'd you guys go on your honeymoon? Do you have any kids? How old are your kids? What do your kids do? Like I'm grilling them. Now, you also got to understand this. It's not like an interrogation. So you don't want to sit there and fire 1,000 questions in a row. Like it's give and take. So I might ask Josh 3 or 4 questions, and then when Josh says something I can kind of relate to, I might go, "Oh, that's cool. My wife and I do this as well. Like or my kids are this age, or my kids play sports, or my kids play this sport, your kids play that sport. Like I'll try and also throw things in about me as well to make it more personable. But that's and you're gonna have to judge that by the flow of the conversation. Like if you're starting to sense like they're getting kind of annoyed and you're peppering them, slow down a little bit. Give them something about yourself. But the reason I'm doing this is because all of this that we do, whether it's final expense, whether it's income replacement, whether it's mortgage protection, whether it's a massive IUL, it's 99% of the time is meant to protect one of those people on their wall of fame. That pictures, the family pictures they have somewhere in their house, these products are meant to protect those people, right? So I want to know who those people are. So that when it gets time to get to the point where I need your social, I need your checking, if he wants to start wavering, I can just address their children or his wife or his grandkids and go, well, wait a minute, I thought this was for them. This is how insurance works. Why are we, what's the deal, right? So that's my biggest point is y'all have to get a little bit better at asking questions. And this works honestly with recruiting too. I think a lot of agents recruit other people and they don't know anything about them. And that makes it really hard to help someone when you don't know anything about them. What makes them tick? What is their priorities like? What are they trying to accomplish? Their goals. Are they family people? Are they money driven? Like all that stuff's important. So here's the simple breakdown of mortgage protection. There's a few different ways, and there's a video I did a long time ago about this, and we don't use it enough because we kind of strayed away from mortgage protection when the rates went up, and we got real heavy into the vets and the truckers and the IULs, and you can also absolutely use IULs to sell mortgage protection. I did it all day, every week for 10 plus years. So so our job is to like, if it's a big dam, right? They're on this side of the dam and they're trying to hold back the water, and you're on the other side inspecting the dam. You're looking for tiny little holes in that dam, and we just want to plug them, right? We want to plug the holes and make sure that dam don't leak. So we need to figure out what they're trying to accomplish. So I might go, so Jesse, and I might unmute somebody just to make this a little easier for me. Let me ask you a question. When you fill this out, what is your main goal? I'm not asking them why they filled it out. That's a stupid question because they'll just go, I just wanted to get a price. What's your main goal, Jesse, when you fill this thing out? It might be, I need to make sure my house is paid off when I die. It might be, I'm not sure what it is. I'm interested to hear what it's about. It might be, I need to make sure my wife can stay in the house when I die. It might be, I just want to make sure that my kids don't lose the property when I pass away. It might be none of that. They might go, I don't know why I need this. But we're trying to establish what the deal is. And that's the first question. What was your goal when you filled this thing out? If in a perfect world you pass away, what happens to this house? It's a real easy way to get there. In a perfect world, you pass away, what happens to this house? They'll tell you. It's going to go to my kids. It's going to go to my wife. It's going to go to my grandkids, my nieces, my nephews, whatever the case may be. The follow-up question to that is, okay, if it's not going to a spouse, if it is going to a spouse, the question is does she want to stay here when you pass? And I'm not pitching him without her, by the way. Now that poses a problem for a lot of people because sometimes they're not together, but I need them together when I'm doing this. This is too important for me to pitch him and then rely on him to relay the information to her. Hell, we can't even get agents that are licensed in this industry to explain this stuff properly to clients. You think a client that doesn't know anything about insurance is going to relay the information I give him to his spouse correctly? Not a chance. So I need them together. If he goes, my wife's going to stay here or keep the house. I go, Nancy, are you staying in the house when Tom dies? Yes or no? I go, a lot of times it's just too painful. The spouse tends to want to get out. It's too big. They don't need this big house. Money's tight. I don't know. We'll get to that little later on down the road. I'm just trying to get them to talk. If she goes, yeah, I want to stay here. Okay, great. Now I'm dissecting their financial situation. How much money do you bring in? How much money do you bring in? What happens when you die? What happens when you die? Worst case scenario, this is what's left at the end of the month. It's kind of like going, I want to buy a house, and the person that's assigned to help you get a loan doesn't ask you how much money you bring in. That'd be kind of dangerous, right? So why is this any different? If we're looking to protect that mortgage, it's really important to understand where they're at financially. And it also helps when everything's said out loud and you can actually take notes, type them out, and then show it to them so they can see the numbers in black and white. Because if Tom is retired and gets a pension, let's say of $2,000 a month, and he gets Social Security of $1,800 a month, and she gets Social Security only of $1,500 a month, you add all that up, that's what they're living off now. When he dies, does she get 100% of your pension, Tom, or does it get cut in half like a lot of companies do? Like that's how a lot of companies work. She gets half of what his pension was. So if it was $2,000, now she'd only get $1,000. Social Security works. if he gets 1,800 and she gets 1,500, when he dies, she's going to take his, which is 1,800, but she loses hers, which is 1,500. So now she goes from making 3,300 to only 1,800. Does that make sense to y'all? Give me a thumbs up if you're tracking with me. Perfect. That's pretty cool how y'all do that. So I need to identify the problem and I need to write it out. If Tom goes, well, I'm not sure we need this, and I go through that scenario and their mortgage payment's $2,000 a month, I can actually show them factually that there's no way she can make it without him. Like, it's pretty simple, right? So then once I know what's going to happen, then I can select my 5 different options. Here's the options, right? One is I'm going to cover the entire mortgage. And inside that, so 1A would be I'm going to cover the entire mortgage, give them cash back and pay their house off early. So 1 and 1A, cover the entire mortgage. Okay? That's a 15, 20, 25, 30-year mortgage. If I'm doing cash back, a lot of times I'll create the policy for 25 years. If they have a 30-year mortgage, at the end of 25 years, they get back all of the money of the premiums if they're still alive, and then they take that money and pay the house off 5 years early. You can also use an IUL for that. You don't have to use the Americo cashback option. You could do the Americo IUL, the MU IUL, as long as the numbers work out. And that's just simple math. I'm not getting into that, not complicating this. But that's option 1, pay the entire house off. With or without cashback, you could do all that stuff. Option 2 is partial payoff. Let's just say Tom and Mary both are fairly successful. Their income's fairly the same. When one dies, it's just going to be the other. They can afford about half of the mortgage payment. Okay, well, I don't need to pay the whole thing off. If something happens to Tom. Now, again, I'm always trying to pay the house off. If they want to stay in the house and they're looking at it, I'm going to show them full coverage. I'm going to go, if you want to stay in the house, make it payment free, here's the deal. But then I also might go, what a lot of people in your situation do is they do a partial payoff. We'll give you this amount of money. We'll pay the loan down, refi, get you a payment down to where you can afford it by yourself on a single person income. Make sense? So 1 is full payoff. 2 is partial payoff. 3 is equity protection. Tom goes, well, when I die, my son's going to take the house. Okay, great. Is your son going to move in here? No, he's going to sell it. Perfect. Tom, you owe $180,000 on this mortgage. How much is the house worth? Oh, $300,000. Okay, so you're sitting on $120,000 in equity. Tom, do you understand how the banks work with equity? And I listen. Most of the time they don't. I go, let me explain it to you. If 7 people die tomorrow that have a bank with USB Bank or GYM or Jimmy's Corner Bank, 7 people die, and 6 of the houses owe 150 grand, but the value is 151,000, and you die and you owe 180 grand, but the balance is 300. They're going to take your house before they take the other houses. If all of y'all were to mess up, they're coming after you first. Do you know why that is, Tom? And at this point, it's fairly obvious, but Tom might go, yeah, because my house is worth the most. It's not because it's worth the most. It's because you have the most equity, meaning they can take your house, sell it, pay that 180 back to themselves, and pocket the additional 120, and your son gets nothing. Do you understand? Like, people don't really trust their banks. They trust them as much as they have to, but they don't trust them to do the right things, because I can tell you they won't. I mean, I've been in corporate America for a while, which is, and I can tell you they don't base things off right and wrong. They base things off of bottom line. So in that case, I go, Tom, so your son's not moving into this house. The goal is to make sure when you pass, do you remember 2009 and 10, Tom, when houses were sitting on the market for 12, 14, 16, 18, 24 months sometimes? Oh, yeah. Okay. Tom, let me ask you a question. What does your son do for work? Oh, he's a forklift driver. Okay, cool. Does he own a house? Yes. Okay, cool. Does he have an extra $2,500 a month sitting in his bank account that he can pay your mortgage? Most people don't. And I'm comfortable asking that. Tom, is your son like mostly everybody else where, they live okay, but they're not sitting on an extra $500, $1,500, $2,000 a month where they can put it towards something that needed to be done, or would that be a problem for them? 99.9% of the time it's going to be a problem. And that 1% of the time when he goes, no, my son's rich as crap, I go, okay, I might go a different route. But I'm actually trying to help them. So if we go through all that and Tom's kid's good, Tom's got a great plan, I might go, Tom, I don't see this very often, but you're good. But 99% of the time, Tom's going to go, no, he doesn't have an extra $1,500 a month. I go, okay, so here's what we're going to do, Tom. We want to make sure that your son gets that $120,000, not the bank. It's kind of like if you had an extra 120 grand in your savings account and you never had a beneficiary attached to it. And you just, when you died, you were okay with the bank taking it. You wouldn't do that ever, would you, Tom? You'd be like, no. Like, okay, so then we don't want to leave your house unprotected because that's kind of the same thing. So we want to make sure when you die, your son has the ability to make the mortgage payments as long as it takes, get the house cleaned up, cleaned out, listed, and sold. And sometimes houses sit for 2, 3, 4 months. Sometimes houses sit for 12, 13, 14, 15 months. We just want to give them enough time to do that and not struggle. Does that make sense, Tom? Yep. Okay, great. And I usually show people 24 to 36 months. Not complicated, but it's a good premium because those I usually do final expense. The fourth option is transfer of assets. Same scenario, Tom and his son. I go, what's your son going to do at the house, Tom? Well, he's going to move in. Okay, great. Where does your son live now? Oh, he rents an apartment. Okay, awesome. So, Tom, here's what we're going to do. We're going to give your son a transfer of assets plan. See, I'm labeling these plans because I don't want another agent to come in behind me and talk to Tom and go, well, Tom could go, well, I already talked to somebody. I have something in place. Well, what do you have in place? Oh, I got a transfer of assets plan in place. That agent's not going to know what you're talking about, not unless they work here. And if they work here, they should be, oh, good, you're with Family First Life, good. Or I have an equity protection plan. No, it's usually, oh, I got 12 months worth of payments. Dude, I rewrote so many policies and put clients in a better situation because I'm not trying to give them a Band-Aid. This isn't a Band-Aid policy. It's like a full healing policy. I'm trying to make sure that the problem's solved, not prolong the inevitable. So if I give them 12 months and we go through a time like we did in 2008, 9, 10, when houses were sitting on the market for 12 to 18 months, what happens when that runs out? Now Tom's son can't afford that extra mortgage payment, falls behind, bank takes the house. And he's paid 12 more months worth of mortgage payments, which means the equity or the equity's higher because the balance of the loan is lower. So I'm trying to give them a solution. So transfer of assets plan, Tom, what I'm trying to do is to make sure that when you pass, let's just say your son re-signed a lease for 6 months or 12 months. Well, to get out of any lease, he's going to have to pay a prepayment penalty. So we're going to give enough money to cover that prepayment penalty so that he don't have to make the mortgage payment while he's making his rent payment. And we're going to cover transfer tax and closing costs for him to actually finance this property. And it's going to work like this. It's a purchase from the bank for the amount that you owe on the mortgage. The bank can't charge him more, can't charge him less. If you owe $112,000 and you pass away, that's what your son's going to get this house for, even though it's worth $300,000. But he's going to have to pay transfer taxes on the actual state assessed value or the county assessed value, which is going to be closer to the $300,000. In Maryland, it's 6%. So $300,000 would be $18,000 in transfer taxes. Add another 5, 6 grand for closing costs, and add another 5, 10 grand for his, buyout of his lease agreement for his apartment. I'm sitting at a $30,000, $40,000, $50,000 policy. But his son's got a plan. His son knows exactly what he's going to do when his dad dies, and he's got the money to do it. Y'all tracking with me? That's option number 3. Okay. Option number 4. This is probably my favorite option. I'm sorry, this is option number 5. We had full payoff, partial payoff, equity protection, transfer of assets, reverse mortgage. Reverse mortgage is my favorite option. I got Tom and Mary sitting here, and they're both 65, 66, 67 years old. They just did a mortgage, which is crazy, or they just did a mortgage a few years ago, which is still, again, crazy to me, but it happens. You never know what their life, what came up in their life that they had to do that for. And Tom's in a place where he can afford the mortgage together with Mary, but Mary's in a place where if Tom dies, she's done. She's either going to have to move out and sell the house, or it's going to get taken back from the bank. when we hang up this call, I want y'all to go Google what a reverse mortgage is and how it works. Because I struggled probably for the first year in this business closing this age bracket. But when I got to the point where I truly understand how to help those folks, dude, I would have taken mortgage protection leads ages 60 to 80 all day, every day. I mean, all day. I would have, you could have never given me a 52-year-old or a 41-year-old mortgage protection lead again. I would have taken them all 60 to 80 because the value in this is so incredible to me. So we're talking to Tom and Mary, and Tom and Mary have the mortgage of $180,000. Their mortgage payment is $1,700 a month. The house is worth $300. Let's lower that a little bit. Actually, no, we'll use that. The house is worth $300, but Mary can't afford the house if Tom's gone. And I go, so my immediate question to Tom and Mary is, Tom, is the issue the balance of the loan? Or is the issue the mortgage payment? And he might go, what do you mean? I go, well, if the balance of the loan was $3 million, but the mortgage payment was $12.48, would I be on the phone with you all right now? Tom would go, no, because Mary wouldn't have an issue. If Tom dies and she's paying $12.48 to stay in the house, nobody gives a rip. So it's not necessarily the $180,000 loan amount. It's the $1,700 mortgage payment that comes along with it. So then I go, Tom, Mary, if I could show you a way to where something happens to you, Tom, Mary, we have a plan to where you can eliminate your mortgage payment completely until the day you die. And then when you pass away, that loan gets paid back off the sale of the house. Most people go, oh, I like that. I go, and it's a hell of a lot cheaper. At that point in time, I might show Tom $180,000 in coverage and go, because if you want the house paid off, it's going to cost you $600, $700, $800 a month. Tom might just be crazy enough to say, okay. I'm not going to show it because I'm half tempted to see if he might say, okay. And I've had people say, okay. But I go, if I show him that payment, he goes, wow. I go, yeah. So now instead of doing that, Tom, we can do this. So let me explain to you how this works. In order to qualify for a reverse mortgage in most states, I think all states, you have to be 62 years of age or older, and you have to have 50% equity, meaning house is worth $300, you owe $150. Well, in this scenario, house is worth $300, but they owe $180. I'm short how much to get to that 50%? 30 grand. So for me, I'm going to go, all right, I'm going to show them a plan for $30,000. Now, if Tom can't afford the house and Mary's alive, I'm showing them both a plan for $30,000 because they both can't afford it. If Mary can't afford it, but Tom can, if Mary dies first, Tom's good. I'm showing it on Tom, so Mary's good if Tom dies. If Tom's good when Mary dies, I'm not showing anything on Mary because Tom's good. Does that make sense? Like, I'm not trying to oversell, not trying to jack premiums. I just want to solve their problem. Now, this is where it gets a little tricky. So I'm going to show them a $30,000 policy. I'll go, Mary, let me explain to you how this works. God forbid, sooner than later, Tom passes away. You're going to contact me. I'm going to put you in touch with someone. Now, y'all need to know some people. And if you don't know anybody, y'all can call me. I'll give you some people. Mary, I'm going to put you in touch with someone that will help you qualify for this product. It's called a reverse mortgage. What do y'all know about a reverse mortgage? And then I shut up and listen. A lot of folks hear some bad things about reverse mortgages. They're all not true. They're regulated. Clients have to go to classes. They're taught what they can do, what they can't do. If someone, like, I've heard all kinds of things. Oh yeah, my cousin did a reverse mortgage and then the bank took her house. Doesn't work that way. Not a chance. Now, if your cousin did something, like, there's also stipulations. If I have a reverse mortgage, if I'm 65 years old, I have a reverse mortgage, I cannot have anyone living in my house full time that's under the age of 65. That's one of their rules. I also can't reverse a mortgage on a rental property. There's rules. If the bank finds out, if I do have a reverse mortgage, I'm 65, and then I have my cousin who's 32 move in with me, and the bank finds out, they'll make me finance the house back into a regular mortgage. So if Mary's cousin, who did lose their house because they had a reverse mortgage, She did something wrong and didn't do what the bank asked, and the bank and the contract stipulate that. But as long as the clients do what the bank says they can do and don't do what the bank says they can't do, there's nothing to worry about. So, Mary, here's what happens. Tom dies, you owe 180 on the mortgage. We need to get this balance down to 150 so that you're below the loan to value ratio that you need to qualify for this plan. I'm going to put you in touch with my buddy. He's going to help you get the paperwork drawn up. You're going to get approved. You're going to go through the classes. They're going to explain to you how this works. And then when you go to close, the insurance company is going to cut you a check for $30,000 you hand to the bank. That's going to give you your down payment to get your balance from 80,000 to 150 and let you be eligible. Now, the minute you get approved, you don't make any more mortgage payments till the day you die. You could live to be 84 or 104 years old. You don't ever make a mortgage payment. Make sense so far? Yes. Sounds too good to be true. It's not. The bank's going to get their money. How it works, Mary, is if you have a mortgage amount of $180,000, they're going to charge you a simple interest fee of, let's just call it 5%. 5% of $180,000, I'll do the math, is $9,000 a year. So every year you live, Mary, they tack on $9,000 to the balance of your loan. Make sense? When you die and that house gets sold, that loan gets cleared out with that money. And if there's any left over, go to your kids, go to your next to kin, whoever you want it to go to. If there's not, it's no big deal. Your family doesn't owe any more money. It's just a wash. But the cool thing is, Mary, the value of your house is going to continue to go up. 5% is a pretty good interest rate. There should be equity at the end of this deal. And then also has a 12-month built-in mortgage equity protection plan for your children. Once you die, your kids have 12 months to figure out what they want to do with the house. They can either buy it back at the balance of the loan, or they can list it and sell it, and then the reverse mortgage will get paid off, and they'll get the balance of the difference. Does that make sense? And those premiums are typically above $200. So, like, all of those deals I showed you, none of them are less than $100 a month. None of them. That might not be a lot, but I know who's big in the selling final expense in this room. Raise your hand or give me something in the chat. Drop a number 1 or drop FEX. Yeah. So, like, FEX to me is a simple sale. And I think all new agents should start on final expense. Why? Because everybody's going to die. They're going to get cremated or buried. I need to show them a couple options, make sure they qualify. We're good to go. Not very complicated. Those 5 things I just went through can seem a little bit complicated and complex, but they're really not. They're really not. And once you understand it and grasp it, and then learn to navigate how to get to where I'm going. So it's like I'm coming down a road and there's 5 forks in the road and I need to figure out which way to go. Well, I'm asking questions until I get to the point of the fork so that I know which way I'm turning. Am I going towards full payoff? Am I going towards transfer of assets plan? The only way to figure that out is to ask questions. What questions you asking when Tom wants Mary to be able to stay in the home, but his age, it's just not possible, and you don't want to sound like an asshole? You need to give me a little more, let me unmute you, Nick, because and sometimes we can't help people. There's no help. But I can tell you what I would do. Let me find you on here so I can unmute you. Nick. All right, you can unmute, Nick.
All right, can you hear me?
I can hear you. You got to give me a little more detail on that. How old are they, first of all?
I don't know. So they're 70s, like
I
late
would have
70s,
I would have done the
75.
reverse mortgage plan.
I know, but a lot of times like I'll get people, and Jacob's pretty good at it, but like people, she's gonna want to stay in the home, but
She
like
don't or she does?
she's gonna want to stay in the home. When
Okay,
like
perfect.
a lot of the people I talk to, they're like new mortgages, right? They just got this home, and I'm
Okay,
like, if Tom, if you die, um, is Mary gonna move out or is she gonna want to stay in the home? Oh, she wants to stay in the home. But like you can just already
perfect.
tell it's not possible. But like how you asking those questions to be like, bro, she's not gonna be able to stay in the home.
Dude, I'm not. I'm getting her to stay in the home. That's the reverse mortgage plan. I'm going to make sure that they have enough equity so when he dies, she can reverse the mortgage and stay in the home as long as she wants. It's a simple. That one's stupid simple. And I'm going to show him if they have a $200,000 mortgage, I'm going to show him $200,000 policy. Like, Tom, you could do it this way, which to me makes zero sense. Or you could do it this way. It's a fraction of the cost, accomplishes the same thing. The goal, ultimate goal, Tom, is for Mary to stay in the house, correct? And then if he goes no, then we got to re-identify what the ultimate goal is. But if this whole time he's been talking to me about how Mary wants to stay in the house, and then I give him a solution, I might go, Tom, so let me ask you a question. Is it just because I didn't give you the answer that you wanted? Or are you expecting something different? Because they might also think, Nick, well, this guy can't help me. Maybe somebody can. And at that point, I might go, Tom, be very clear. I've been doing this for 16 years. I'm 100% sure this is your best option. Here's what I'm willing to do, Tom. I don't even know if you're going to qualify for this. Let's get you qualified. You can go talk to 100 other different agents. They're not going to give you anything better than this. Let's get you qualified. God forbid you pass away tonight. We know Mary's good for tomorrow. You can go look and see if there's something else for you. But I've been doing this a long time. This is your best bet. A lot of times they don't even go look. I dare people. Dude, I please go find something better. Please. And they typically don't. So that one's an easy one, Nick, because she wants to stay in the house, can't afford full protection. And by the way, 99.9% of the people can't afford a full payoff. 99% of them can't.
So
So
like what
that's
what
where, God,
like at like 75, right? Say it's a $200,000 mortgage, so
yep,
you're gonna pay down half, right? They have no equity in the home. It's a $100,000 policy. I mean, that's at 70 something years old, it's probably $400 or $500 a month. Like, where do you go from there when, like, if they're broke and really can't afford it, and you can already tell
yep.
that, or you
Well,
just too expensive. Like, how do you pivot from that moment?
then it's time to it's time to man up and figure out what we're gonna do. Because the way we're sitting now, Nick, it's a disaster if he passes. Correct?
Hmm.
You don't think he knows that? He has
Yeah.
to know.
Yeah.
So then I'm going, all right, Tom, listen, I'm here to help you. And I know this is not where you wanted to be at this point in your life, but we need to figure something out. I might just give him a $50,000 policy. If he can't do 100, and dude, by the way, if he's 75 years old and he's eligible, I might get him a 15-year or 10-year term. Because in 15 years, that balance is going to be down past where it needs with the value of the property going up every year and the balance of the loan going down every year. They'll be real close to that 50%. And oh, by the way, if she's 84, you can have a little bit less equity because they're 84. So like it starts at 50%, but if you're 84 applying for a reverse mortgage, if you're 54, 55%, the banks have some wiggle room there. So she'd probably qualify because she's so daggone old and they know she's not going to live another 25 years. They're not losing money on the deal. As long as it makes sense to them, they'll do it. I'm in it with him. Tom, I'm here to help you figure this out. But Lord knows if something happens to you and we don't have a plan in place, Mary's not staying here. We don't know where would she go? Now I'm asking stuff like that. Does she have any sisters around? Would she go live with her sister? She got a brother? Kid? Would she go live with your kids? Like I'm putting it on him. It's because it's important to know. And I think a lot of times we just stop because they're like, oh no, I can't. No, well, what happens if we don't do this today? What does that look like? Where are you going? And if she's on the phone with him, he doesn't. I mean, I know I don't ever want to let my wife down. Tom don't want to let his wife down either. So you just got to get them to open up a little bit more. And if they've got tunnel vision and they're only focused on paying that loan off, you have to get them to open up a little bit by just asking more questions and showing them. Like I would pull out every carrier I had and go, okay, I'm going to show you the top 25 carriers here in this business. And I might show them quotes on all of them. Be like, Tom, they're all going to be this amount of money. And by the way, 75 years old, he's probably not in super great shape. I mean, he's got something. Blood pressure, cholesterol. He's not getting like a preferred plus rating. Like, and I'm never going fully under it, and that ain't happening. So, Nick, I think it's the more confident you get with this, the easier it becomes because you just know there's a pivot to everything. And I was stuck on that too back then when I started. Like, oh, they want to pay the house off. I can't. They can't afford it. Then I started thinking they can't not afford something. You're right. They can't afford to pay the whole house off, but they can't not afford to do something. I just need to give them something that's valuable enough for them to want to move. So the more you keep doing it, the more you keep practicing, the more you keep pitching it, the better it gets, the easier it gets, the more valuable it sounds to your clients. Like, I'm fired up about this stuff. To me, it makes the most sense in the world. If I'm 65 and I can afford to pay the entire mortgage off, I don't, why am I? For what? And then that situation also, Nick, I might go, all right, well, we can't do can't do 50% of this equity. Mary, if you can't, like, if we can't find, if Tom and I can't find something to help you out in this situation, and you have no other choice but to sell the house and move out, where would you go? What would you do? Well, I don't know. Maybe I get an apartment. Maybe I buy something smaller. Well, Mary, what if we did this? What if we put a plan in place? Because you do know you can finance a house with a reverse mortgage as well. So if you're 60, 62 years of age or older, and you could put 50% down on the place, you can finance it with a reverse mortgage and never make a mortgage payment as long as you live. So, like, what if we give them enough money, as much as they could possibly afford, in place when he dies? She goes find something smaller, cheaper, puts all that money down, plus whatever she gets from the sale of the house, and qualifies for the reverse mortgage that way. Like, I'm throwing out options. But again, you just got to get creative and so on. Dude, the only reason I figured out how to pitch people this way is because I kept trying to get more creative because people weren't buying from me. I was getting pissed. I'm like, dude, I suck. Like, I'm sitting with 24 people a week, and I'm only closing 2 or 3 because people are telling me they can't afford to pay the whole house off. Most of the time, and I would be willing to bet 90% of the people that y'all talk to, if they're older, their kids don't want their house. Their kids, like, if my parents pass tomorrow, there's 0% chance, zero, that I'm moving into my parents' house. Zero. Like, I'm sure a lot of y'all feel the same way. So most of the time, that paying the entire house off is really pointless unless you're trying to give your kids a tax-free inheritance check. But then it makes no sense. I'm like, well, why? You don't want to pay the house off, because you pay the house off, then your kids sell it, they're going to pay capital gains. At that point, you just want to give them a life insurance policy, give them the cash. Let them sell the house. Like, let the balance on the house be as high as possible. Give them as much cash as you can, because that's tax-free from a life insurance plan. Bringing value. People don't understand what they're doing most of the time. They're just not educated enough. So I'm trying to indoctrinate these clients to get them to the point where they can make a financially sound decision on what's best for them and their family. Does that make sense, Nick? Let me get back in here. Do we have any other questions in here? I have a meeting with a vet later tonight. I know that he has a VA life. I can't read, sorry. I can't read. It was small. I can't see. Yeah, I know he has a vet life plan paid for, but doesn't like that cost goes up. Nobody likes that the cost goes up. However, they looked into other insurance houses. The payment's higher than that. Would like what he wants, which is at least $350K in coverage. How do you navigate situations like that? Just asking questions about work. Okay. Cayenne, they have to sell me on why they want 350 grand. Like, what do you want? I want $10 million in insurance. Why? Like, tell me why you want that. Like, what is it going to be earmarked for? Or are you just trying to leave a crazy legacy? Because at the end of the day, like, there's a lot of things I want. Just because I want them doesn't mean it's going to happen. So you gotta have to set their expectations in line with their reality. Like, the reality is, if they make $3,000 a month and a $350,000 policy's $500 a month, reality is he can't afford it. Now, if he makes 10 grand a month, that reality is a little bit different. So I think identifying the reality of the situation and having the client see that, because sometimes they hear stuff and it sounds good. Oh, why do you want 350 grand? Oh, I saw it on TV. It sounded good. Well, let's do this. let's figure out what we actually need. And a lot of times insurance is like it's a stepping process. Like some we put in base coverage, and then as we can, we add to it. But we need to get something in place to cover the base because that VA policy that goes up every year, what's going to happen is at some point he's going to cancel it. He's going to cancel it because it just costs too much damn money. So we don't want him to pay for that for another 5, 10 years and then get to the point where it's too expensive. He cancels it. Then all of that money put into it is just gone. So he's better switching now while he's younger and healthier than waiting. But get something, figure out what his main goals are. Obviously, they probably want to be able to cover their final expenses. Maybe they want to cover their mortgage if they have one. Maybe they want to make sure that, you know, their kids can go to school. I don't know. You got to lay all that stuff out. And let's just say all of that stuff equals $640,000. But they can't afford 640. Then I'm backing into that and going, well, all right, well, what can we do? Because insurance isn't getting any cheaper. If we wait till you can afford the whole 640, you'll be paying a lot more than if you start it now with 200. We added another 100 in a year from now, and then another the last 350 in 3 years from now. You'd still be paying less than if you waited till you could afford to do the whole thing at one time. And again, guys, this is the more reps. I think I've probably at this point in my career have presented over 10,000 times. So I'm actual like professional, right? They say you got 10,000 hours to become a pro. Like I absolutely got 10,000 hours in this business. I'm a professional. Like it rolls off of my tongue like butter. I get it. So the only way for y'all to get to that point where you're that confident, like this is so simple to me. There ain't a scenario I can't figure out. There isn't a person I can't help. And oh, by the way, sometimes helping is not doing something. I'm okay with that too. I don't close every single person I sit with. I try to help them. I'm not always trying to close them. Some people I don't close. Some people I don't want to close because I know it's going to be a chargeback. Some people, very, very few, I'd say 1 out of 100 are actually covered enough. 1 out of 100. So like, don't ever, if you're talking to your manager, your mentor, and they go, well, how'd you do? So-and-so, what happened in that appointment? Oh, they had enough insurance. Don't say that because it doesn't happen, but 1 every 100 it sits. Like it really doesn't. People are not insured properly. Most of the situations you can better. A lot of these companies sell crap policies. So you just got to keep doing it. At massive activity will cover up your flaws, and then you just get really comfortable. Like I always relate this to sports, and it's like, who's ever played golf? Give me a thumbs up in the chat if you've ever played golf. Nobody? Oh, there we go. Rants. Okay. KG. Lewis. All right. So like, dude, y'all sucked the first time you hit a golf ball. Like you were god awful because I know. I've seen so many people hit their first golf ball. It wasn't even funny. And like Jacob Bruns, he still sucks. And he's been playing every day for like 3 years. I'm kidding. Jacob's actually pretty good. That means he's just not working hard enough. But off track. If you want to get good at golf, you're going to hit balls every day. Like every day. If you want to get exceptional at golf, you're going to hit probably 2,000 to 1,500 to 2,500 balls daily. You're also going to putt every day. You're going to hit out of the sand every day. You're going to chip every day. That's how those guys go from sucky to okay, to good, to great, to excellent, to the best. It's just repetition. Same thing with basketball. I mean, you look like I love listening to stuff about Kobe Bryant. He was the first one at practice, last one to leave. There's a story like he was in DC and he lost a game and they were all out and the team went out after the game and they came back to get their stuff out of the arena and Kobe was in the gym at 1:30 in the morning shooting. Like they had already went out, had some drinks, came back to get their stuff to go home, and Kobe was still there shooting. Like that's this business. The more you do it, the better you get. And it has to be a passion. I am passionate about helping these people. I am passionate about figuring out a way that they can protect that mortgage. You do know most of these people, it's the biggest investment they have. They probably their house is more nine. I don't want to give statistics because I don't know, but I would imagine more cases than not. Most of the people that y'all talk to and help, the value of their house is more than they have in their 401k. It's the biggest thing they have. So when you look at it like that, dude, why would you not do everything in your power to make sure that they understand the options that they have in front of them? They also understand the options that they don't have. To Nick's case, like you can't afford it. They need to understand that too, in a way that they see it. Because if a lot of times, if I was struggling to help somebody, I mean, a lot of times I would just write it down, like on a piece of paper. I would write income, right? I would just do something stupid like this. I go, okay, here you go. Here's your mortgage payment. This is your income. There ain't much left at the end of the month. And if we eliminate this or we cut this in half, you can't even make this. Sometimes when they actually see the numbers, Jamie's that way. Like I'll try to explain something to Jamie for like 30 minutes. And then finally I get frustrated. I go get a piece of paper and I draw it. She's like, oh, I got it. She's a visual person. So if you're doing this over the phone and you're not utilizing a Zoom where you can share your screen and type stuff out for them to actually see black and white, you're making a mistake. I know there are some like screen sharing things, tools that y'all use. Dude, I'd be all over that stuff because I wrote everything out and I would show it to them in black and white, almost like an illustration you would use for an IUL. Like you pay this much for this much, this long. And at this year, you can take out this amount of money for the rest of your life. Here's how much you've taken over those years. Here's how much you put into it over those years. It's that simple. But when people see it in black and white, it becomes real easy for them to actually grasp the fact. So when you're struggling getting someone to understand that they just can't afford it, dude, show them the papers. Show it to them. Like it's not like it's not like I think like we always talk about like this the young folks today. It's like a feel like I feel like it. I don't feel like it, or I want to love my job. I feel like just because they feel they can do something doesn't mean it's actually true. Like I'm a big facts guy. So I might also say something like, all right, Tom, can we agree that we're just going to go based off the facts today? So then when I draw out the income and cross out what Mary's gonna lose when Tom dies, I go, the facts are this, Tom. You die, Mary can't afford this. She's gone. Just a matter of time. The actual question is, do we want to make sure that she might get something out of this or nothing out of this? Put it on him. No, again, no guy wants to disappoint their spouse. They all want to take care, and no spouse wants to no wife wants to disappoint their husband either. They just want to make sure they're okay. But I can tell you when you're passionate about it, and when you actually sound like you give a rip, you'd be surprised how much they open up to you because it's genuine, and you can't fake genuine. So if you're not a genuine person, I don't know. Might want to start talking to the man upstairs and ask him to give you some genuineness because it's really easy when you're just telling the truth and actually caring about helping them. But when you're just trying to make a sale because you need to make your mortgage payment, that's the problem right there. So don't put yourselves in that position. I'm going to answer a couple questions because it's 7:01. We'll wrap this up in 4 minutes. Okay. So, Nick, do I ever switch mortgage protection and burial because they don't have any insurance at all? Yeah. Dude, I'm asking a million questions and I'm sitting at the base of that dam and I'm plugging all the holes that I see. If one of them is final expense, absolutely. Absolutely. I would do my best to write more than one policy in a home. That also made sure my persistency was higher. More policies you sell in one house, the higher your persistency is. And this is a persistency game. The more policies stay on the book, the more money you keep in your pocket. Real estate agent told me that when a house goes into foreclosure, the bank returns the equity value to the owner, keeping only the outside loan balance. No, it's not. It's not true. It's not true. I guess if it's set up properly, it could possibly be true, but not in everyday situation. No. Nope. Does anybody else have any questions? I have an older couple, 76, 78. Okay, good. I have an older couple, 76, 78. The husband has cancer and they are in a position where they need to sell their home to make ends meet. Hold on, I got to blow this up because it's not letting me scroll. I thought a reverse mortgage would be ideal for them so they can stay in a home. The only insurance they have is a term that has matured. That's a fan. If they have the equity, absolutely. Dude, here's what's crazy. I was sitting with a lady one time and she was spending $800 a month on prescription medication and she had a house that was free and clear, but she only received like $1,600 a month for Social Security. So half of her money was going towards medication. She had the other half to live off of: car, phone, food. This lady was about to stop taking her medication because she couldn't afford it. And she said, I barely eat. She's like, I'd rather at least live and enjoy my life and live a shorter period of time than live the way I'm living. And I helped her get a reverse mortgage and it literally saved her because she was just going to stop taking her meds. And she had some conditions that would have killed her. But yes, yes. And they're not, it's like, you know, you'll get people that say they're bad. And they're not great for every situation. But for the situations they work out for, they're really good. Like life saving in a lot. In this lady's case, it was life saving. So again, I would do a little homework um, and read up on how they work, what the requirements are, the do's, the don'ts. So that way, when someone asks you something, you can answer because the more you sound like a professional, the more they'll trust you and the easier it is for you to get them to move. And by the time you get to the part where, all right, I need your social, it just comes out. All right, I need your account number. Who do you bank with? Oh, Bank of America. Okay, I already have your routing number. I need your account number. Boom. Boom. That's the goal. If you build the value, this gets super, super easy. So again, the 5 different closes, full payoff. And again, you can do and if you want to go through the cashback option in depth with me, I'll do that with you. That was by far my favorite. That and the reverse mortgage, full payoff, partial payoff, equity protection, transfer of assets, reverse mortgage. Those 5 scenarios, you can cover any mortgage out there. You can help any family out there. And now, by the way, I forgot to tell you all this. Like the reverse mortgage protection plan, like that's a final expense plan. Like I'm not selling a term for that scenario. I'm giving them a whole life policy, 30, 40, $50,000. Sometimes like there were scenarios I had to write 3 of them because 30,000 was the max. I wrote 3 for 30 to get to that 90 grand. But again, your premiums are higher. Your persistency is better. Y'all need to get on this mortgage train. This is what we did. When FFL went from 0 to the largest IMO in the industry, we were probably 75% mortgage protection. And it was good. Like and the ones that were here since 2018 that went through the interest rates dropping and COVID, like they'll tell you they were all on mortgage protection too. Like they loved it. Shit, Dean still writes mortgage protection. So does Jonna. There's a reason that they do that, and there's reasons they write so much premium. So hope this all makes sense. Yeah, there you go, Dean. Best lead ever. So if y'all have any questions, please reach out to me. I appreciate y'all for spending the evening with me. I'll see y'all. Take care. Love you guys.